Hey everyone, and welcome back to the AI Tech channel. Today, we're diving into a seriously hot topic that's got Wall Street buzzing. Usvath Damodaran, the Dean of Valuation himself, just dropped a bombshell, predicting Nvidia's stock could plummet by a whopping 31%. 31%. I mean, wow, that's a scary headline, right? But before you panic sell, let's consider something else. What if he's wrong? What if, instead of crashing, Nvidia is about to defy the odds and reach even greater heights? We're going to explore a contrarian view, one that suggests DeepSeek, of all things, could actually fuel Nvidia's growth. Stick around. This is going to be interesting. Okay, so here's the deal. Damodaran, a respected valuation expert, sees potential trouble for Nvidia. He believes the emergence of companies like DeepSeek, with their lower-cost AI models, could signal a commoditization of AI chips. The fear? That this will drive down prices and hurt Nvidia's profit margins. DeepSeek, for those who don't know, is a Chinese AI startup making waves with its supposedly cheaper and more efficient AI models. Now, the contrarian argument, the one we're going to unpack today, is that the huge demand for Nvidia's top-tier chips from the likes of Meta, Microsoft, and others will actually outweigh any potential slowdown caused by these cheaper alternatives. In fact, some are betting on a blockbuster Nvidia earnings report to prove just that. Let's play this out. Let's say the contrarian view is right. Let's say Nvidia crushes its earnings. What happens? First and foremost, we'd likely see a significant rally in Nvidia's stock price. This would immediately push back against Damodaran's pessimistic forecast. More importantly, it would restore investor confidence. Think about it. All that fear and doubt suddenly evaporates. Investors would breathe a sigh of relief and remember why they invested in Nvidia in the first place. Its dominance in high-performance AI chips. This positive sentiment would be huge for Nvidia. A strong earnings report wouldn't just boost the stock price. It would validate Nvidia's entire strategy. They focused on building the best, most powerful chips, even if they come with a higher price tag. This approach has paid off big time. If Nvidia continues to thrive, it proves that the market is still willing to pay a premium for top-tier performance. This is especially crucial as the market starts to differentiate between high-end and lower-cost AI solutions. Nvidia's betting on being the king of the high-end, and a positive earnings report would solidify that position. Now, even if Nvidia does well, expect some serious volatility. The debate between the bearish and bullish viewpoints will only intensify. This means increased trading volume as investors try to time the market and capitalize on the swings. This is the kind of environment where fortunes are made and lost. So, do your homework, understand the risks, and be prepared for a wild ride. But the impact wouldn't be limited to Nvidia alone. A rising tide lifts all boats, right? A strong Nvidia performance would likely boost sentiment for other chip manufacturers, especially those focused on AI, like AMD. Even though AMD is often positioned as a lower-cost alternative, a healthy AI market benefits everyone. Investors might see AMD as a way to play the overall AI boom without paying Nvidia's premium. Continued strong demand for Nvidia's chips would send a powerful signal. Major tech companies are still heavily investing in AI infrastructure. This is a massive endorsement of the entire AI ecosystem. It means more money flowing into related hardware, software, and services. Think about it. Data centers, cloud computing, AI development tools. All of these areas would see a surge in investment. And what about DeepSeek? Well, if Nvidia continues to dominate, it puts pressure on DeepSeek to prove its value proposition. They need to demonstrate that their lower-cost models can actually scale and deliver comparable performance in real-world applications. This could lead to even more innovation and competition in the AI market, which is ultimately good for everyone. It forces companies to push the boundaries and find new ways to improve AI technology. Finally, if the big tech companies continue to rely heavily on Nvidia for their AI power, it could solidify the dominance of existing cloud providers like AWS, Azure, and GCP. These platforms have already invested heavily in Nvidia-powered services, and continued demand would reinforce their lead in the cloud AI space. This creates a powerful network effect, making it even harder for smaller players to compete. Okay, let's zoom out and look at the bigger picture. What does all this mean for society and the economy? Continued investment and innovation in AI infrastructure, fueled by Nvidia's success, would accelerate the adoption of AI across various industries. Think about it. Self-driving cars, personalized medicine, automated manufacturing. AI is poised to transform everything. This widespread adoption would lead to increased productivity, automation, and a whole new wave of products and services. The growth of the AI industry would also create a ton of new job opportunities. We're talking about AI researchers, developers, engineers, data scientists, and AI-related consultants. These are high-skilled, high-paying jobs that will drive economic growth and innovation. While there's always concern about automation replacing jobs, the AI industry itself will be a major engine of job creation. The widespread adoption of AI could significantly boost economic growth. By increasing productivity, efficiency, and innovation across various sectors, AI has the potential to unlock trillions of dollars in economic value. However, we also need to be aware of the potential downsides. If AI-driven automation leads to job displacement in certain industries, it could exacerbate income inequality. We need proactive policies to address these potential negative social consequences. The accelerated deployment of AI also raises some serious ethical considerations. We need to be mindful of bias in algorithms, data privacy, and the potential for misuse of AI technology. These issues need to be addressed through regulation and ethical guidelines to ensure that AI benefits society as a whole. It's our responsibility to make sure that AI is used for good, not for harm. Now, let's talk about the risks. The biggest technical risk is that DeepSeek, or something like it, could actually succeed in commoditizing AI chips. If they can deliver comparable performance at a lower cost, it could definitely eat into Nvidia's market share. That's a real threat that Nvidia needs to take seriously. The impact? Reduced revenue, lower profit margins, and increased competitive pressure. Even if Nvidia maintains its lead, there's a risk that its growth rate could slow down. The emergence of cheaper alternatives might cause some investors to question Nvidia's long-term growth prospects. To counter this, Nvidia needs to demonstrate continued strong growth in its upcoming earnings report. They need to show that they can still innovate and dominate, even in a more competitive market. Another business risk is customer diversification. Major customers like Microsoft, Alphabet, Amazon, and Meta are all investing in their own internal chip development and working with lower-cost providers. This could reduce their reliance on Nvidia over time. Nvidia needs to maintain strong relationships with these key customers while also diversifying its customer base. They can't afford to put all their eggs in one basket. Even with strong fundamentals, negative market sentiment can significantly impact Nvidia's stock price. The market can be irrational, and fear can drive down prices even when the company is doing well. Nvidia needs to be proactive in communicating its value proposition and managing investor expectations. Transparency and clear communication are key to maintaining investor confidence. Finally, let's not forget the ethical risks. Nvidia's chips power many AI applications, and if those applications are used in ways that perpetuate bias or violate data privacy, it could damage Nvidia's reputation. Nvidia needs to be a responsible leader in the AI space and promote ethical AI development. This means supporting research into bias detection and mitigation, establishing ethical guidelines, and implementing strong data security measures. And then there's the geopolitical angle. The fact that DeepSeek is a Chinese startup adds another layer of complexity. The semiconductor industry is increasingly subject to geopolitical tensions and trade restrictions. Nvidia's operations and market access could be affected by these factors. They need to be prepared to navigate this complex landscape and comply with all applicable regulations. So, to sum it all up, the situation with Nvidia is complex. While Damodaran's prediction of a 31% plunge is certainly alarming, there's also a strong contrarian argument to be made. The demand for Nvidia's high-performance chips remains robust, and the company has a track record of innovation and execution. However, there are also real risks to consider, including increased competition, potential commoditization, and ethical concerns. The future of Nvidia is far from certain, but one thing is clear. It's going to be a fascinating ride. Ultimately, whether Nvidia's stock goes up or down depends on a complex interplay of factors. The key is to stay informed, do your own research, and be prepared for volatility. Don't blindly follow the predictions of any one expert, no matter how respected they may be. Look at the data, understand the risks, and make your own informed decisions. Thanks for watching, and be sure to subscribe for more in-depth analysis of the AI tech landscape. Let me know in the comments what you think about Nvidia's future. Are you bullish or bearish? I want to hear your thoughts. Until next time, stay curious and keep learning.